So the proliferation of similar ETFs obviously, has been on the rise and does raise concerns about potential systemic risks. There are concerns about things like market overlap, right? Like many similar ETFs can lead to very concentrated investments in the same assets, which potentially amplifies market movements and contributes to these bubbles or crashes, that happen in the market. There's also a very much crowding of trades that I'm seeing right now. Many of the popular ETFs, which are kind of like market cap weighted, including the S&P 500. And what has happened is recently the share of mega cap tech stocks, which have been booming on the back of this AI wave, the share of them in S&P 500 has reached more than 30%. So a small number of these stocks having more than 30% exposure into S&P 500, it does raise concerns of concentration risks. And in such cases, if there is an abrupt market shift, it can cause simultaneous sell-offs and increased volatility. And the third, of course, systemic risks. A downturn in a heavily invested sector can lead to widespread sell-offs and impact the overall market stability. Now, while there are all these concerns, obviously there are also a lot of mitigating factors. The reality is, ETFs usually cater to a very diverse set of investment strategies. They span across asset classes, strategies, and aids in kind of like this risk diversification in general beyond the market cap indices as well. There is a lot of transparency when it comes to ETFs. They disclose their holdings full-fledged, and that also helps in avoiding unexpected exposures and manage the risks better, because if you know what you're getting into, it's easier for you to also understand where you already have overlaps and concentrations, etc. Plus, there is a lot of like regulatory oversight. Financial regulators, they ensure that the ETFs actually operate very transparently and manage the risks, helping maintain that market stability. So in conclusion, if you think about it, similar ETFs, they can pose these risks. There are, diversification, transparency, and regulation that can actually help mitigate these, risks as well. And investors on your side should really be focusing on making sure that your portfolios are diversified to manage these potential risks effectively.